Let's bring in Robert Luna now, CEO and Chief Investment Strategist at Shorevest, the CI financial company, joins us from Newport Beach, California. Rob, always good to see you. Let's start with the data. PPI was close to consensus, didn't rattle the markets, but this inflation debate is not settled, is it? Is the downtrend in the markets intact, and do you retest 3,700, the June lows on the S&P?
Yeah, so our view is that inflation has peaked. We had a hot number yesterday, and obviously the market didn't like that. But if you look at the previous 5 days in the market, we rallied 5.5%, 6%. And if you look back at the beginning of that rally, 1 to 2% of that is still intact. So although we gave some back, it makes sense that people are trying to get ahead of what peak inflation is. And if you look at the last 6 periods of major inflation, 6% above, that we've had in the U.S., the stock market in the U.S. has put in a bottom prior to inflation actually peaking. And if you look at that, a lot of those times we were actually headed towards a recession. What that clearly means, though, is that the stock market is going to bottom. We believe that those June lows will hold way before we start to see economic news and inflationary news come down. Now, inflation's hot, that's just one report. If you look at commodity prices, if you look at the technology index, if you look at what a lot of CEOs and small business owners are saying in terms of their own costs, a lot of them are saying that we are at peak inflation. 3,900, and why technicals are so important, when we're all trying to look at this data on a day-to-day basis and we're facing so much uncertainty, we find a lot of comfort in going to the charts. 3,900, when we rallied, when we dropped to that 3680 level on the S&P was resistance. It's now become support. And if you look yesterday, the market tested on the S&P 3,900. It rallied back above that. And today we held above that. Today we clearly could have seen a big sell-off in the U.S. markets. The market's actually stabilized, technology-led. So that's a good sign in our view.
100 basis points on the 21st of September. That looks like an outlier, but is that a possibility given what we saw with the CPI number and the market's reaction, or is 75 basis points more or less priced in now, Rob?
No, I think 75 basis points after yesterday's pullback is priced in. The Fed is not going to be deterred by one CPI report. I think 75 basis points is probably what we're going to see. I'd be surprised if we saw 100 basis points.
Got it. But the Fed is more data dependent, isn't it? That's what they have been telling us. Then what can we expect from Thursday's retail sales? Are the numbers, when you look under the hood here, going to be consistent with a pullback potentially in consumer demand or some degree of resiliency? And where then does that leave the case for the big names like Walmart, Costco, and Best Buy?
Well, I think it's going to be specific. I mean, we've seen names like Target who didn't get their inventory right. They had some more discretionary items there that really got beat up. I think names like Costco, based off of where they're at, are going to hold up much better in this economy. Now, if you look at some of the contraction, though, that we've had, the consumer is clearly pulling back a little bit. We're hearing that from some of the retail CEOs. So I don't expect gangbuster numbers, but I also don't expect things to fall off the cliff, because let's remember, unemployment is still very low. If you go out to any major city, restaurants are still packed. There are people still shopping. So even though we might technically be in a recession, I think all signs point to it being a relatively mild recession.
Can I bring in the risks? Potential railroad strike, Union Pacific, Norfolk Southern, CSX all taking a hit, but a rail shutdown, Rob, if it does come to that, has far broader implications for the supply chains and for inflation. Can it be averted? And is this yet another potential headwind that the market needs to navigate?
Well, it's definitely a risk. And, you know, our view in terms of inflation is that we put a lot more weight in the supply chain being shut down, that restriction of supplies, everything from consumer goods, automobiles, time and time again. If you even look today, if you try to go and purchase a new car, it's very, very difficult. Supply chains were shut down for a long period of time, and anything that adds to that being extended or prolonged, that return to normalcy, obviously is going to be a headwind, obviously will contribute to inflation. So the hope is that can be averted. But as you mentioned, it's definitely another headline risk that markets can move on because they're so sensitive to these headlines right now.
And talking about buying a new car, Rob, is that new car going to be an EV like a Tesla or a gas guzzler? Given what the Detroit 3 have been doing, the incentives that the Biden administration has been offering, the emissions credits, etc., or are EVs increasingly the place to be in this environment?
Well, I definitely think every major automobile manufacturer, if you look at where I'm at in the state of California, you just got about 7 or 8 more years where you could still even bring gas-powered vehicles into the state. So I think the regulatory environment, both in terms of restricting gas and incentivizing EVs, is really headed in that direction. You see every major auto manufacturer, from Ford, Chevy, obviously Tesla, to even some of the luxury manufacturers like Ferrari, already gearing up for that. So I think that's definitely where you want to be. That has to play part of your thesis and in the consumer's mind and psychology. When they see gas prices in California $6 at the pump, that's going to push them much more into buying a car like Tesla versus a Suburban that's gas powered from Chevy.
Yeah, I'm still sticking with my Nissan Almera, 7 years this November, and going strong. But there you go. Other brands are available, ladies and gentlemen. Rob, thank you very much indeed for that. We'll have more with Robert Luna in a short while.